Good afternoon, everyone, and welcome to the PivotBoss monthly outlook for July 2018. Today is July 9th, and we're doing it about a week later than usual, but again, we had that 4th of July holiday last week that kind of put a wrench right in the middle of the week. So coming out of that, I think we decided to do it on today's session, which is a good time because we got a lot of great candidates that we've already found here in our previous afternoon trading session, and then we also have additional scans to go through here today. So again, welcome to the PivotBoss monthly outlook. I've already seen some of you have provided some candidates here to look at and some symbols, so if you have additional symbols you'd like me to look at, please feel free. I'm going to jump on first of all just a few of the broader futures markets to get kind of a higher time frame feel for what the market may be setting up to do here the rest of the month and heading into the end of the summer. And then from there, we'll start looking at individual stocks as well. So number one, let's take a look just broadly speaking at the ES, the S&P 500 E-mini futures contract. This one recently had a major rally here. On this session right here, which was the afternoon session Monday, we had a nice failed new low and a nice squeeze. At that point, I was pretty bullish that we would likely return back toward 2791.75. That's the FOMC key level from June 13th. The following session was a pretty aggressive shakeout type of day, but nonetheless, this thing still rallied, and we're almost at that 2791.75. So that's an FOMC key level from June 13th. And that zone continues to be major resistance in the charts. One thing that has also been very consistent is higher lows. So you see here higher lows, higher lows, higher lows. Over here 2800 basically has been resistance, resistance, resistance. And so we have an ascending quality to this market. Typically speaking, ascending patterns break to the upside. They typically break to the upside. They typically spark a major phase of expansion. So this is a market that continues to build energy. We knew it from the very beginning of the year. This impulse sell-off was wide enough to contain prices for 6 to even 8 or 10 months. Right? It was designed to keep prices in this range for a while to digest the recent trending behavior, and from there we'll start to see expansion. Now, we have yet to really retest the recent low, or that major pivot low, except for a few days after its creation, and we've continued to push higher. So right now, I think this has a really good shot to at least attempt some expansion here. Whether it fails or not remains to be seen. I think right now, you know, there's some upside here. You know, we don't have anything that's traded up here in a long time. Everything has been down here. So if it starts to push through 2800, I think it gets a quick push to the opposite end, and we could be at 29 very quickly. And then from there, does it build out and continue? So I think this has a lot of energy, and we're getting to the part of the year now where we're closer to the end now than we were to the beginning. So we've been talking about this range since this sell-off, which happened last week of January, first week of February, and again, we've gone 1, 2, 3, 4, 5 months sideways in this range, and now we're working on month 6. So again, sometime in the next X amount of months here, 2 to 3 months, we could be seeing full-on expansion, or we could see, you know, this thing stay in this range for 2 years if it decides to come down here and do its thing. So we've seen that happen and play out here recently as well. So right now, longer term perspective, ascending wedge at resistance above 2800 opens up perhaps another 100 handle rally. Failure at this zone continues to keep prices between 2700 and 2800 for now. So a really strong move here. One thing we talk about in the trading room is when to engage certain strategies. And when I see a failed new low like this, it's usually one of my most bullish, most aggressive type of patterns. It's one that if you see that type of thing and you trade options, an in the money option is usually a great way to go. In the money 70 delta, you know, could get you where you're taking advantage of that move really nicely. And so again, there's several candidates that are starting to build up like that here today. But this is played out really nicely over the last 4 to 5 sessions. Once we reach these highs up here and hit FOMC, that's going to be very important, because one thing with regards to the ES, FOMC key level goes offered, you keep going down until you reject, and then you come back for a retest. But if this was offered, chances increase that it will be offered again. So again, are we in a trading range right here, or is it going to try for expansion? You know, I think odds favor more trading range behavior than it does expansion, but we'll see pretty soon with the test coming up. So that's a little bit of a kind of an outlook here for the ES as we continue to progress throughout the year here. First half of the year done, second half of the year underway, and again, based off of how price has traded sideways in the first half of the year, I wouldn't be surprised if we started to see some sort of major expansion toward the end of the year, or heading into the end of the year. Could be significant. Now I'm going to take the other side of that with gold over here. Gold has been very bearish. This one has been bearish since failing to hold above the 60s up here. That was our favorite level to sell. One of my favorite levels to sell of all time almost. I mean, 1375 is just a brick wall. Nothing's really gotten through that level in 5 years. So if you look at 1375 here, that's this level. Basically that level right there. That's 1375. And this is 1 year, 2 years, 3 years, 4 years, 5 years and a half that it's been below that level, and every time it comes to it, it is offered hard. And we were there for most of the year, at the beginning of the year, and eventually it rotated back down. So again, that has been a significant area of resistance, and we continue to trade basically in the bulk of this larger volume profile right here. So we are kind of trading right where we need to be, but you can see that we have not traded down in this portion of the range in quite a while. Are we going to start working that way down, or is this thing still ascending and we're just going to stay here? So 1240 to 1360, that's the range right now. Do we break below 1240 and maybe get down to about 1200? That could be doable, but I don't really see it getting much below that. So on a longer term basis, again, we've sold off quite a bit. Maybe we could see a little bit more selling pressure before it's safe to bounce it back toward value, because what we're seeing right now was a rally attempt that has failed on the daily time frame, and that could lead to another round of weakness. So take a look here. Let me zoom in on this. If you look at this right here, this is a weekly bar, and again, today is Monday, so we still have another 4 days to finish this bar. But as of right now, it's a failed new high above the previous month's high in a downtrending market at a bearish lower value pivot range. All of those things put together is not very bullish for gold right now. And if you look at the daily chart again, I thought we had a good shot to rally this morning the way it looked. But I mentioned that any pullback into 1250 needs to be defended. The way that this rejected today is a lot stronger than that. So I mean, it would really need to hold 1250s in order to consider a bounce back toward CVPOC with the way today rejected. So with this bearish look to it, you see, remember when we had that sideways range and we ran stops through 1295s? This is the first major pullback to the trigger zone since then. The PIMA trigger zone is the space between these moving averages right here. That right there is the 21 period. This right here is the 8 period. You bounce into that zone. That's a great area right there to defend for bears for a shot at new lows. And so we've seen quite a rejection. So short story here is I think we could be headed lower given today's finishing move. Any pullback into say 1260 to 1262 could be an opportunity for bears to defend and try to retest lows. If this is going to fail, if this down move is going to fail, it's going to be as a result of rejecting down here. Higher low, lower low failure, something like that. Otherwise, this thing could just rip lower. And again, below 1240 opens up 1200 below. Now, if we want to put a target on this, we can make this a bear target using our PivotBoss ADR method targets. bring this up here, and now based off of this recent high, which is the high of the month so far, we can now project lower average monthly range to the downside, and that gives us a target zone between 1214 and 1227. So basically this zone right here would be your high probability target zone based off of that pivot high in a downtrending market. Boom. You usually get a move somewhere in this zone. That is your 100% target. That's your 75% target. That's a pretty good target, and that blows 1240 out of the water there and gets you very close to that 1200 down below. So this one could be looking at another round of weakness based on how this week plays out in gold. Wanted to take a look at RTY, the E-mini Russell 2000. This is the small cap. This one has been very, very strong. It's really outpaced significantly the broader market in many respects. A lot of this was here where it built out and then saw that initial expansion, the retest. All of these just defended until recently where it had that impulse move down. We talked about the potential to see a bounce back up that would give us a new key range. That new key range could be a short-term range to watch, but it would not surprise me if we built out up here a little bit before we continue higher. But I think this thing has a really good shot to continue toward the 100% key range target. That's 1823.30. So basically from this impulse sell-off right here, impulse sell-off, bounce back to the mid, builds energy, breaks, 50% expansion, holds here. That is usually the path for this type of move. The only question is how long. Do we go sideways a little bit and then go, or does it start to just rip right now? I think you look up by August expiration, I think you're probably at 1823 because this one's just been on a tear. So again, this one's been very bullish. So I wanted to give you a few markets here that are a little different. The YM also, that was one of the ones that was the early candidate for weakness. And in our trading room, a lot of great astute traders in there, of course. Several on top of this one in terms of showing weakness compared to the broader market. And from there, we noticed how price was being offered the FOMC key level, and it just melted lower right into 24K, which was our next major target down. The last major target would be 23.4, but not ready for that just yet. So today, running the stops back up, a huge move up, and is now coming into a zone that's a little fuzzy. So this one is not the easiest because we're not at an edge, we're not at a new high or low. We're kind of right in the middle. Here's 25.4 and here's 23.4. That's a $2,000 or 2,000 point range, and we're just kind of sitting and chopping right at the middle of it. And so again, it shortens the playing field. This is it right now. It's 24K to 25.4. That's the range right now. And currently we have held at the bottom end of this range for a while, and now we see a stop run day up. This could easily flow higher toward that 25.4. The only spot where it may see a little bit of hesitation might be around 24.8, 86, somewhere in that zone where it's the midpoint of this range. So this one's not the easiest at the moment just because of where we are on the chart, but the way that this thing is broken to the upside here suggests that any pullback in the next day could be a great candidate for a squeeze and a return back to the June 13th FOMC key level. That's 25.327. So the next few days or maybe the next 2 weeks could be up toward that level as long as price can remain above 24.5. On a longer term basis, I mean, look at this thing. It's just building significant energy after last year's incredible rally. This range is everything, and once we start to see expansion, I mean, again, we're going to be looking at 30K, 30,000 for the YM. Again, it wouldn't surprise me if we're there, sometime early next year, or maybe even by May or something like that. I mean, it could just build sideways a little bit more and then just start to run. So that's going to be the 100% target at some point down the road if we can, you know, find some strength beyond the 25K. So right now 25.3s have been resistance up to about 25.8. But this is building the energy that we talked about at the beginning of the year. Now 6 months in, or 5 months in from that sell-off, I think we're closer to the end than we are to the beginning. So this one's still building some significant energy for perhaps a significant move to 30K down the road. Doesn't have to break to the upside. If it were to break down, you know, we could easily get a move to the 50K or 50% target. That's 21.2, 21.290, and then a big move to the 100% would drop it all the way to 19K. I don't really see that scenario playing out, but I could see a retest of the year's lows and then a trap below 23K leading to a move. I could see that, but not quite maybe dropping all the way here. But we'll see how it continues to develop in this market. We have Bitcoin as well. Now Bitcoin is it's getting to a point where it might actually see some nice movement, and it might do it very, very soon. I haven't been very bullish Bitcoin. I was bullish here, but it fell shy of the upper targets. I was bullish here. It got right to where we expected. And then I was bullish over here, and it started to just fail. It just wasn't really going. So we kind of took that off and instead said, you know, it probably needs to run through those lows. And it did. It actually took out those lows on this day here, which was 629. We've popped up since then, and we're actually sitting up here near 6,700. So you see this LVN right here, that's 7K. That's very important. That LVN at 7K. We're building out below that. We kind of have a little bit of an inverted head and shoulder thing going on. Above 7K will open up 84.42, and it could be quick. I mean, it could be, you know, 5 days in there type of thing, and it could be much higher into. I wouldn't really overdo it, but it could probably get back toward 9K as well. So this has a good shot to really see a nice bounce and rally here, but it all kind of depends on if it can get above 7K. So no easy feat, because this one has been beaten down ever since the futures have come on, and it hasn't really shown the strength that it had before. So I'm not really holding my breath that it can go beyond 7K, but I know if it does start to push through it, it has the potential to see some juice to about 84.42. The bonds, 30-year bonds, we had this one as a short candidate last Friday in our trading room. This is one of the ones we found based off of rejection at the key range high. So this is the key range from here to here. A sell-off with a rally, back to the mid. Those are your key range levels. And then right here's the rejection of the key range high. And then today with a big move down so far. That one could lead to as low as 143s, but it all kind of depends on if price can stay below 145.27s. We might see a pullback day tomorrow, and that's when bears are going to need to kind of defend for a shot pushing downward, because so far prices at and below this 8 period have been bid. So it would need to really, really reject those prices to start pushing this thing back down. But 143 could be ahead. But for a one-day move, not bad at all. Now, crude oil. Don't think we've talked about crude oil just yet. This one, if I turn on the 10 period calculation here, so number of days, let's push this one to 5. And what that's going to do is going to calculate the 5-day range, the current 5-day range versus the average 5-day range. So 1, 2, 3, 4, 5 days from that high to this low. That's the 5-day range. And so when you start to measure this range, the current range versus the average, you'll notice the average 5-day range is usually 5.63 points. So 5.63 points. Right now the current average range is 3.13 points. And that makes it below 65% of ADR, which is that red dotted line. So that means we are compressed, and we have the potential to see some significant expansion at some point. I think it's It's hard to bet against this thing going up, even though earlier I mentioned that it could be headed towards 69s. Things started to change today when price bounced off of 73s, and then really started to show strength to the end of the day. Now, this previous month's close is still very important. That's where bears are defending. But over the last 2 days, we've had higher highs and higher lows. It would not surprise me if we start to see a stop run day that takes us into about 76. So that could be a huge day up for crude oil. But again, a breakout in any direction could be significant. Given the overall trending behavior, I'd love to see a failed new low below 72. That could slingshot this thing much higher. Not necessary, but that would be a great slingshot move. Now, when we're looking at how far this thing could go to the upside, I want to back out of this thing and go to a weekly. Just give some quick look at recent price action here. So we've continued to push higher. 62s right here. That was the high end of our range. When we couldn't get above 55, I said, you know what, if it can get above 55 for once, we have 55 to 62 as the next range. And it went through that level and pushed through it. And then above 62s, it's made a great move into 70, now 74s, as high as 75 now. And so we're in this range here. That's a great looking range. Here's 75 bucks right there. And you can see how that was prior support there, and that's the level that gave way. So really, in the near term, 75 is a big time longer term level, and above that level would start to open up the next price distribution above, the old 75 to 110 zone. That was incredible range, incredible day trading in that zone. Do we start to make our way back up that range? I think that happens above 75, right? So just longer term, we're kind of at a major inflection point. As long as we can hold 68s on a longer term basis, you know, we're flowing up. You know, we currently in this kind of channel, so I could see us coming down back toward about 62s. It could theoretically happen. And then from there, this thing could try to make a big time zoom higher. So, you know, we're at a very major inflection point in the chart, but what do we do from here? Are we just going to start to push through 75s straight away, or are we going to pull back a little bit and come back towards 62s and give it another go? Again, we've had quite a bit of strength. We've built some energy. I could definitely see this thing making a go for it either way to the upside. It's just been so strong. Not my favorite. Again, this was my best entry point down here. Was a great spot to get long. It really moved. Now holding. I think it's building fuel for the next move. So those are a few of the major futures markets we're covering here in our room. I wanted to go through some stocks as well. Number one, I want to start with Spotify. This one is one we found here in our trading room today. This is IPO date came out back in April, and since then it's actually built out sideways very nicely, established value at 153.75, and then taken it bid. If you look at the IPO key range, it's from the IPO day down to the day 2 low, back to the midpoint. That gives you your IPO key range. Right now we are holding above the top of that range and establishing acceptance at that zone with a shot to see further strength. Today's failed new low with a new buy signal here suggests that we have a shot to rally. We've built up enough energy sideways here to warrant perhaps a squeeze. And so again, if we were to break to the upside, what targets are we striving for? Well, the 100% target is 202.5, and that looks like a really good target that could be hit. But remember, this could be about 4 weeks away. 3 to 4 weeks of strength could get you there. 1, 2, 3, 4 weeks of sideways here. So you're talking, you know, perhaps 3 to 5 weeks of strength that comes out of it. So with this one, quite a bit of options action on the 180 and 200 strikes for this one. Looking at The August expiration, 180 to 200 call vertical on this one. So the 180s here, slightly out of the money, up to 200. That one right now, last print I think was 620 on the debit there. So that's one that I'm looking at here for a shot at seeing this thing really open up to the upside. It's a little expensive here at a $170 stock, but the 165 in the monies are 1860. And that one could be an aggressive way to really milk a move higher if it were to push higher. So this is a really good one that's building up. I like the 180 to 200 vertical call spread on that one. Looking at, let's see here, the next one. I liked OKTA, was a good one. Very similar price action to what we were just talking about. With this one, looking at the failed new low here, that failed new low was a 3-day low that it took out there, and then it closed back almost above the midpoint of the previous day, right at it really. And so again, sideways action. You can see this key range with a rejection off the key range low. It's been building out in the lower distribution of this range. I think it has a great shot to at least retrade back toward 58.5. That's 5 points. Actually, sorry, we're 51.86 right now. So this is about 6 points away. And then a shot to see some overflow into about 69. So with this one, we're looking at perhaps 2 months of strength, right? Somewhere around 8 weeks of strength, where this thing could get you to about 69. The first move might be pretty quick, and then it might build and go. So I like this one as a short-term move to about 58 to 60. Followed by a long-term continuation toward about 69. The in the money 50 right now is 450 debit for the August expiration. That's right about here. So that one's not bad. Another one we looked at here is FOSL. This one just recently experienced a major move up. It's had a huge rally ever since our initial buy signal, which was back here at $8. We had a huge earnings that came out of it, and almost getting toward our long-term target of 36, 37. So from this rounded bottom, we thought we had a shot to get toward about 37, and that's when price was $8. We were looking at a move toward that zone, and it's so far it's done everything and more, getting as high as $32. And this recent pullback may fuel another round of strength higher. So pulls back to the Pima trigger zone, you know, a little bit of a pullback today and go. So again, this one has a shot to perhaps get to about 36, 35, 36, or as high as 37 over the next few weeks. AEO was another one we had. American Eagle Outfitters. This one also building out, building some energy, going sideways. Failed new low today. This one sitting right at the 23 support level, or just above that 23 support level. That in the money 23 call, again for August expiration, about $1.90 right now. I could easily see this thing rallying to about $27 over the next 5 to 7 days or so. So it could be pretty nice here. We've gone sideways here for a while, and if you double click this and take it from a 5-day to a 10-day, click OK, you'll see right here it is a narrow 10-day range. And when you have narrow 10-day ranges, you tend to see expansion out of them. Given the direction of the market continuing to trend up, we have a good shot to push higher. The last time we had it long was here on this day. That one right there, we had the in the money 19.5 as the idea. This thing got to 23. It's doing it again, but this time it has even more energy behind it. Again, I think it has a good shot to get to about 27. So those are a few of the candidates that we found here a little bit earlier. I know some of you put in some candidates to watch out for here as well, so let me get to those. EEM is one. And the question here was for to look at EEM on a 20 plus year perspective. And so this gives us a long-term look right now at this market. This is the emerging market ETF. I'll also look at XLF as well. But you'll see right here, this one over the long term, 52s, very, very nice resistance between 50 and 52. Down here, 28 is support, and a little lower. And, you know, of course, we've been above it and below it. That's what markets do. And then we snap back to the middle. Here's value. And it definitely appears that this one's on the downswing right now, right? We were just above value. This gray line right here is VAH, the value area high of the composite profile over the last 20 years. That's above value, best time to sell, best time, best time, best time, best time. And then ideally you return it to value. And that's at about 41.50 or so. So not quite there just yet, got very close. Looks like 42 something. So we got a little bit more to go, and then perhaps we could get stuck here for a while. So that's one thing about those long-term composite VPOCs, long-term trading ranges. You can see right here, it stayed between 46 and 36 for quite a number of years. We're coming right back to that zone. And if this thing, say it fails here off of like 44, we could be making a move right back toward about 35.41 over time. But how long does it chop in here first before it does that? Remember, CVPOC's like a magnet. So that's kind of some higher time frame outlook here, a 20-year view, a large trading range there. It's almost back to value. I think it continues to push toward value unless it can get back above 45s, right? So any bounce into 45 or so could be, or 46, you know, could be a selling opportunity that takes you down 10 handles to the bottom of value. Anytime you have a big, large range like this with that CVPOC, you always have to know that it could get stuck there like mud. One of my favorite analogies comes from the book Mind Over Markets by Dalton. And basically the idea here is that an LVN, right, an LVN like this, a low volume node, it's like bouncing a rubber ball on concrete. It's going to recoil big time. Bouncing a rubber ball recoils. And then CVPOC, when price gets to that, it's like bouncing a rubber ball into mud. It just kind of gets stuck. And that's what it's designed to do sometimes. So this is a really big CVPOC. So I wonder, on the next bounce, when it drops, does it just get stuck? Here's a look at XLF. Now this one we've had on the buy list for a while in our room, but it was messy. And it looks like today was kind of the day that some of these markets needed in order to pop. And we saw some pretty good strength in some of the banks and financials today. You can see this move 2.25% to the upside. Major move. Now the question was, do you think XLF has bottomed for this year? And I think it has bottomed for the moment. I don't know about the year. So the year is, you know, this market has been downward sloping, and all of them have a little bit of rounded, you know, but this LVN is very good, and what we were considering was a bounce back toward 28, maybe as high as 28.50, and then from there, you know, that's been the range. So, you know, I'm only thinking in terms of this right here because that is the market right now. Outside of that range will dictate the next move. And again, these markets have been very strong. At some point, whenever it's ready to break this downtrend, that's when this thing will really start to go. And if that's soon, then perhaps, yeah, we could get going. You know, really everything starts above 28.75. That's where things really start to get going, and it could be exciting if that happens. But this was a really good move. We've had it as a long candidate for an entire week, but it just really danced around that area. It didn't give us great entry idea, but today, great stop run in that one. And I think it has a good shot to get back toward 28s, but really, if it gets above 28.50, 28.75, things can really take off for it, but not expecting that as of right now. Here's a look at FXI. So FXI, and this is the China large cap ETF. Again, just some general key levels. And what I usually do is just look at the most recent rejections or LVNs in the charts, peak highs, peak lows, those types of things. So that level, or maybe a little bit higher, somewhere in here, right? Let's go 52. There we go. Somewhere down here, 28.50. And then here, this is going to be 38.02. And we're going to call that one CVPOC. Boom. Oh, forgot to change my color here. This is always considered value for me. So there's some good levels here. This one has shown rejection off the upper end of the range. Again, given the D-shaped profile of this market and the general rhythm of this market, right now everything's flowing to the downside. That could take you to about 38. And anything below 32 starts to become a really good idea to bring it back up toward 38 and back. So this is a long-term trading range that's been in play. We've seen some rejection here, some absorption here, head and shoulder type of thing with a breakdown. 38 could be ahead. And so in this kind of scenario, any bounce like into 45s or something like that could be an opportunity to sell for a push downward. So right now this one's still on the way down, and again back toward value. It's going to attract price like a magnet, especially after a rejection up here. Usually brings it right back down. So that's a look at FXI. We also have EWJ, and this one also from a long-term perspective coming up here and rejecting prices near multi-year highs. This is the Japan ETF, and right here 64 to 62, major area of resistance up there. Another sharp rejection with some absorption here, breaking down below 58s. That could spark some sort of return. Again, longer term, that could dictate a move as far down as 47.32. We have broken below the 55 period based EMA as well on a long-term chart. Let me see what it looks like on the daily. Way down here. And so this one, yeah, I could definitely see. So that was the longer term view. The shorter term view here has this D-shaped here with this big impulse move and this little range and a drop to below this low with a rejection. So in the very near term, it wouldn't surprise me if this thing gets back toward about 60. But after that, does it start to make its move toward that lower VPOC that we marked? Thanks for those charts. McDonald's was another one here. Let's see. Let's take a look at McDonald's. Here are the key levels that we've had on McDonald's. We have the impulse high up here, 178.70. The low is 153.86. Midpoint here, 166.28. That gives us a really good key range here with some great action. We took one huge gap down to about the 25% level and then back up. And ever since we've been bid off the 155s. So look at the 155s there, bid every single time. We've held there for the last 5 days and popped 2 days ago. That's pretty strong. So right now we're on the flow. The flow is to the upside to about 166. you do have that impulse high there with an impulse low, so high probability target at 163.50, but I think 166 has a good shot to being reached in this one. That's just a short-term move, right? So that's a swing move. The next 2 to 3 weeks could be to the upside, as long as price can continue to hold the 155s. On a long-term basis, this one has been trending higher, so this was kind of a welcomed digestion of that recent trend, and that kind of helps to build the energy for the next major move. I think this one has a good shot to get another major rally out of it. And again, like the broader market, at some point down the road, 155 such a major level. A break of that level, I could see it opening up a 15 handle drop very quickly, and as much as 25. It could get all the way down there to about 130. If we were to get to 130, it'd be a big buy probably. I don't see that happening, but this one's been pretty strong. I think the flow right now is to the upside to about 166. 155 is a key level. Eventually, this energy, we'll see. We'll feel expansion. It'd be big. All right, covered a few there. Thanks again for those suggestions. Let's see here. I wanted to go through a couple of more lists here. I have an inside value scan that I have run just a moment ago. And what this is showing is, for those of you that have read my book, Secrets of a Pivot Boss, one of the major setups that I really love is this setup right here. And it's basically this pivot range, those 3 pink lines. And you see how they're very narrow, and then they're inside the 3 pink lines from the last month. That's an inside value relationship, and what that shows is compression of prices. And when you see that, there's a tendency to see major expansion at some point that month, likely in the direction of the existing trend. This one happens to just be breaking out today and rallied already 4.5%, but it could only be the beginning of what could be a multi-week rally. So I really like this one right now. That's MBL. This one has built energy after the recent rally, so this thing rallied up. It's above the key range high and holding, maintaining market structure. It has shifted value up from here up. It has shifted value and taken it bid. All of this right here suggests that we could be looking at more strength to the upside, and I think 42.63 could be a great target. Not quite sure that would be reached this month. I think that's a 2-month target, so by say August expiration perhaps we could be there. So again, this one building energy. This one made it on the list because of the inside value relationship. That's usually a very powerful forecaster of expansion. You know, it could really move to the upside, and perhaps today's already day 1. So that's one to keep an eye on. Another one, let's see, was MRO. This was another one with a tightly coiled range. Here's the pivot range, very narrow. It's inside this one, and here's the compression so far for 1, 2, 3, 4, 5, 6 weeks. So if you're going to compress for 6 weeks, that means you might have about 6 weeks of movement in you, right? Sometimes a little less, sometimes a little more. So it could be, say, 4 to 6 weeks or something like that of strength. And again, we're trading right now at 22 bucks. If this thing really wanted to get up and go, I could see it rallying to about 27 over the course of the next couple of months. I mean, back to this HVN, through the LVN and going. This could be pretty nice. Let's see here. I also... I think that was it. Oh, this one's already breaking to the downside. This one is one of those scenarios that you tend to see once a trend is coming to an end. So you see this thing trending up, trending up, trending up, using this pivot range as a staircase to new highs, and then you get an inside value relationship and the thing breaks down. Here today, a failed new high above the previous month's low, failing. I mean, all of this suggests more weakness to the downside, and that could really shift the bias negatively over the next couple of months, because this is only month one on the break. And then you see this right here, this lower value relationship. Then next month it comes into it, and boom, it goes down again. And then the next month it goes into it, and all of a sudden we're here a couple months later. So right now this one's one that has already seen a little bit of expansion, starting to show additional weakness, which could fuel some more downside selling pressure in this one. But I just wanted to run a couple of those scans. I think NBL and MRO look poised to see further strength, and those could already be on the way up, with the current day today being 4% winners. Couple more candidates to flip through, and we'll be done for the session here. If you're looking at right now, I'm going through my wick reversal scan, so it's showing me significant rejections. Ideally, when I flip through these, you want those rejections to be at areas of support or resistance. You want it to be at significant LVNs, or perhaps you want multi-day failed new lows. Those types of things that could really spark some nice movement. If it's a rejection tail that's not in the right spot of the chart, you're probably not going to see the type of reaction you're expecting. So always look to engage these types of patterns at the appropriate spots in the charts. Let me see here. Okay, I just flipped through this list really quickly, and there was one I liked, and I already forgot which one it was. It was at the top of the range. Oh, this one right here is Nordstrom. So Nordstrom right now is at the top of its range. Oh, this is tough. This is the range I'm referencing here. It's 46 to 54. Value is 51.45. Right here, failed new low. Things are trending up. Is this about the time where we get the squeeze into 60? That could be a 55 to 60 spread to take care of that very nicely. And it looks like right now, the 55 options heavily traded in today's market. 59.59 volume traded today on the 55 July options for the calls there. So that's a lot of volume transacted at the 55s today. Again, that kind of shows you that perhaps someone is anticipating expansion through that level. And right now, 53.52, you're buying $1.50 out of the money, which makes them a little cheaper here. So those 55 options, those are 11 days out, by the way. They're only $1.02 right now. $1.02 for those options, 55 out of the monies here. And again, huge volume traded on those today. The goal here is that if this is ready for upside expansion, you likely run very quickly to the next key level up. That's 60. So again, you could go a 55-60 spread right now, and it'd probably cost you nothing. So let me do that right here. Again, how fast does that play out is the question. So let's see. Let's go vertical here. A 55.60 would be about 92 cents right now. So this is one to consider for a potential expansion scenario. The way that the moving averages have pushed higher, the way that we had a failed new low today and we're holding at resistance, kind of higher lows with the horizontal resistance, all of that kind of suggests that we could see expansion. Any failure to do so, so say it tries and fails, then we're likely headed all the way back to 46s. So that would be a big scenario if that were to happen. So I think this could be flowing to the upside. Alright everyone, unless anybody else has any more candidates to take a look at here today, I'm going to go ahead and call it a day. I want to say thank you very much for joining me for this monthly market outlook. I will get it up and posted to the website and on the YouTube page. So again, thank you very much for hanging out with me this afternoon. I'll get it up as fast as possible, and we'll be back at it again tomorrow in the trading room. and then I will see the rest of you soon. So again, thanks for hanging out, and I'll see you all soon. Take care, folks.